We've seen institutional adoption of crypto accelerate this year, Martin. What's your view on how demand is evolving?
I think we're seeing some quite dramatic changes. I mean, it's clear to me that crypto is now an institutional asset class. We're seeing not just growth in institutional investment, we're seeing acceleration, and that's a continued acceleration. We're also seeing, which is interesting for us, more and more people trying to buy into crypto-based, digital asset-based ETPs to gain exposure. So we've seen a big increase in that in the last year. So there's something like 200 billion worth of assets in those products at the moment. We've seen in the last 18 months something like close to a 60 billion in growth in Bitcoin digital ETP assets. In the last 3 months, 10 billion increase in Ethereum ETP assets. So it's becoming a mainstream asset class, and it's accelerating.
Martin, what role do you see DeFi playing in bridging traditional finance with blockchain-based investing?
Well, what DeFi does is it really provides the tools, especially around yield generation and income, to package proper institutional regulated products. So I think that's the key to it. And what we're seeing in the last year is a big increase in that. So now over 50% of institutions are involved in crypto lending. And there's a stunning number, which is total value locked has increased by 70% in the last year. So more and more people are adopting these kind of DeFi-based products to enhance the returns they generate from their crypto exposure.
How do you view the current state of the crypto market, particularly given the volatility we've seen in Bitcoin and Ethereum?
Well, actually, that's a really interesting point. If you look at Bitcoin has definitely become a real store of value to institutions. Most of the new investment is coming from institutional investment. And the kind of volatility has come from mainly macroeconomic factors. So it's a bit like gold has always been seen as a store of value, a hedge against uncertainty. So when uncertain things are happening, the price of gold goes up. The same thing's happening for Bitcoin. It's now accepted. It's got a similar status. If you look at Ethereum, there's been a huge amount of extra investment in Ethereum, and that's because some of their they enable new things to happen. They've got a lot of protocols around DeFi. They're enabling tokenization. They're enabling real-world assets. They're enabling layer 2 applications to link to layer 1 blockchains, which add to enhanced speed and scalability and efficiency of blockchains. So they're doing all sorts of great things. So demand for Ethereum is up. So overall, what we're seeing is the big picture is reduced volatility, greater demand, and more efficiency in the market. Obviously, we're going to have short-term fluctuations, but if you contrast that with what's happening in other stock markets, it's not really massively different.
Martin, what's next for Fonekia, both in terms of new products and also the broader strategy for growth over the next 12 to 18 months?
So I think in new products, it's all around creating more yield-generating products. We're going to look at baskets of tokens, as I mentioned. I think there's a lot of growth potentially in tokenization of real-world assets. And we're going to be increasing our assets under management basically by creating new products. We'll also look to list in different exchanges across Europe to widen our investor base. So I think we're going to see fairly dynamic growth over the next 12 to 18 months.